Merry
Good
Christmas.
morning. Merry Christmas. All right, so I'm going to go ahead and get this ball rolling and let everyone go. I first want to say thank you so much for spending some time with me today as the holidays are beginning. Y'all see, I'm all festive. This will be recorded, and so I will actually have this recording come out along with kind of a little takeaway, a little leaflet for you all to reference. So I've had a lot of success with travel nurses. And so I wanted to share some of the things that I have found and see if I can be of assistance to help you all close more in the coming year. Because, I mean, who doesn't want to do that, right? And so let's get this shared here. Bear with me for 1 second. I had a lot of things open right now. Okay. Can you all see my screen? Can you all see my screen?
Yes.
Yes.
Perfect. All right. So today we're going to chat a little bit about qualifying and closing travel nurses. I've closed loans with most of you. So for anybody here that does not know me that well, I am Joy Bailey. I'm known as the Mortgage Boss on social media, and I work for Prosperity Home Mortgage. And then, of course, I have my NMLS number here, 1236060. All right. And so a little bit of background about me is that I have been in mortgage lending for 8 years. I've been at banks as well as non-banks alike. So I have a little bit of insider information about, some of the ways that lenders think on both sides, why some are more conservative, why some are more aggressive, especially when it comes to this particular type of income matter. I have an accreditation. I'm an accredited mortgage professional, which is the designation that I got through the MBA. Prosperity Home Mortgage is where I have worked for the last year, and we are one of the top 20 lenders in the nation. And we have VA loans, FHA, conventional loans, fixed, adjustable loans. We also have a loan called Uplift, where it's designed for borrowers that might need a little bit of help with their credit, and we don't want to overly penalize them as far as the pricing and rate is concerned. So there's a little bit of a safety net underneath those sensitive credit score borrowers. We have Rapid Close, which it is an amazing opportunity to go ahead and send out your loan documents so the borrower can sign as much as they possibly can before they get to the actual closing table. And we get you in and out of the closing in 11, 12 minutes. Like, I literally timed it. So I'm so serious. And then we have Borrow Smart, which is something you may or may not be familiar with, but it does allow for up to $1,500 in closing costs assistance. So today's agenda is I want to talk to you all about how you can make $10,000 over the next 90 days by targeting high income and high converting clients. Let me ask you this, if you don't mind, just kind of take yourself off mute and tell me, we used to do this thing when I was teaching called, it was a KWL chart. What do you know? What do you want to know? And what have you learned? Kind of tell me if you can fill in the blank of what do you know? So I know blank about travel nurses, just based on your experiences that you've had, whether loan was successful when it closed or if it may have fallen apart.
I know that their income is used differently than regular income, and that they can be paid several different ways, that it's not always the standard that all loan officers know how to look at.
Yeah, that's very true. It has some nuances to it for sure. Koya.
I know they make a lot of money.
They make a lot of money. Yeah, yes, we definitely know they make a lot of money. We're definitely going to talk a little bit about how much money they make and what that translates to in terms of buying power. And so anything that you all want to know, anything that you were like, why did this happen, or anything you could think of right now? I mean, we'll have question and answer a little bit later, but anything you can think of off the top of your head.
How is their income treated differently?
Okay, we'll definitely be addressing that. Is that because of a bad experience, or just because of you kind of feel like you just know it's a little bit different?
Yeah, just to know it's a little bit different.
Okay.
Yeah, kind of to piggyback off of that, I have a friend who's a travel nurse, and just trying to figure out what to do exactly to get her pre-approved for that, because again, they don't have like 2 years of tax returns or anything like that. So what documents may be needed, what do you guys look for, all of that.
Okay. Excellent. So that is exactly what I look forward to covering for you. I want to talk about the benefits of working with travel nurses, where you're going to find these gold mines of people, and some of the obstacles, and address the solutions to some of those obstacles. And I'm going to be completely transparent to you, just because I don't lie. I don't like to paint pictures, that are just not true. Some people are just not going to be able to move forward just yet. But the benefit of working with travel nurses is whenever they have those little hiccups, they are very easy to fix, super quick. If they need to save up a little extra money, they can work a few more hours. If they need to pay down debt, super duper easy. And as far as the income documentation is concerned, more likely than not, they already have a history of being a nurse prior to getting into travel nursing. Usually they don't just go into travel nursing right out of school. So there is the added opportunity and benefit there as well. So travel nurses, you guys, I was looking back at my pipeline of closed loans, and I averaged out their income. The average travel nurse, and I will give you kind of some demographics, they were all female, they were all single, and they were all millennials. And their average income was $130,503. Like, okay, like I'm all for that. I wish everybody made that much money. But when I averaged the purchase price, $304,000 was the average purchase price of those travel nurses. This actually skews a little bit low, because Ariel and I actually closed one of the loans that I'm talking about. And that applicant, she's a young lady. She's in her mid-20s. She might be 26, 27 years old. She makes $124 an hour. And she qualified for like $600 and some odd $1,000. But what's so cool about her is, as she, going through her 20s, she's now engaged. She didn't break the bank on her first house. What do you all think that she's getting ready to do moving forward after she gets married? Probably going to rent out that house, give Ariel a call, because we do a lot of co-marketing together, and she's going to buy another house. She has a very low debt to income ratio. So this is an excellent opportunity to set yourself up for future purchases if you're able to get into this travel nurse circle. Millennials represent 43% of home buyers, which is the highest share of any generation, according to the National Association for Realtors. And this is very recent data. So as we go into the recession, I was trying to think of myself, like, how do I make sure that my business isn't falling apart? And how do I not just grow it, but I want to double it going into 2023? focusing on recession-proof jobs. And as we know, there's never going to be a circumstance where medical professionals are not going to be necessary. So they will find themselves in scenarios where they won't have to question their future income, even though, as we talked about a little bit earlier, it is something that tends to fluctuate. So I want to talk to you about, how do you qualify your client? I don't want you all wasting your time because you're like not really sure what to say or how to say it. The three main things that we're looking for as lenders, and this is banks and non-banks: stability, predictability, and likelihood for it to continue. I always kind of say it's like a before, during, and after. Who are you before you got to me, and who will you be after you leave me? So the funny thing is, and I made a note here because I want to make sure that I really kind of hone in on this. Some of the differences that you'll find between lenders in terms of what they will and won't do, it's not because they're being mean or they're not being flexible. It's literally because of the thousands and thousands of pages of guidelines that we have that address everything. Travel nursing is not in there. And you would think that after so long, I'm sorry, ambulance is right here. But you would think that after so long of having travel nurses and going through COVID, this is something that they would have addressed, but they haven't. And so when there is space, there's opportunity to either say yes or to say no. And so generally speaking, what I have been able to do to differentiate myself is find those spaces, expose those spaces, and come up with cases why we should approve a loan based on past experiences. And I have a really good example that I will be sharing with you soon. So when a travel nurse comes to you and is saying, oh, I want to buy a house, I have all this money, what do I do? The very first thing we need to establish is, how many years have they been a travel nurse? Generally speaking, we're looking for 2 years of travel nursing experience, whether you're W-2 or 1099. When you are a W-2 wage earner, you want to make sure you ask that. That lets us know, okay, we don't need to get any tax returns. Super easy. We're going to look and see, what did you earn in 2021 year to date? What did you earn in 2022 year to date? And what did you earn in 2021? Since we're at the end of the year now, even if they don't have a W-2, if you can provide or tell a borrower to be able to provide their actual final pay stub for the year, all of the information concerning overtime, bonuses, everything that we will find on the W-2 will be on that final pay stub to allow them to move forward, so they don't have to wait for the 2022 W-2 if they haven't received it already. But the big difference between 1099 and W-2, if you're 1099, and as you all know as realtors, that means you are self-employed. That gives you the right to write off things, and it reduces your taxable income, and it could potentially impact what we calculate for your income. The next thing that you want to find out is, how are they getting paid? Every nurse's contract is set up a little bit differently depending upon the company. And what I have found is, when you're asking for those W-2s and pay stubs and things like that, as I talked about prior, that stability, how many agencies has this person been with? Do they have 4 different agencies in 2 years? Because even though they might check the box for they have the 2 years, it can feel a little shaky to the underwriter who's like, well, what you doing? And so the one thing that all of my nurses had in common, they were with the same agency for 2+ years. Well, let me back up, 1.5 years plus. So that is something that you're going to find is going to make your transaction a lot easier and make their experience in home ownership not as frustrating, because they're like, I got a lot of money, I don't nobody want my money. So think about that as you're speaking with them. They have shift differentials, they have overtime, they get bonuses, they have travel pay, they may have car allowances. But the one thing that seems to trip people up is the stipends and how they get paid for housing. I'm going to give you the best, easiest way to say this. If they are getting reimbursed, forget it. If I get the loan application, the way that I calculate income up front is I'm the most conservative. I'm not looking at overtime. I'm not looking at bonuses. I'm looking at, do you make $90 an hour? How many hours have you worked? And we're going to take a 2-year average of that. That's going to be the easiest, most painless way to get someone qualified. I had a scenario earlier this year where there was a young lady, she was with the credit union because, you know, they have the 100% financing options available, and they would not give her the additional income. It was like another like $1,500, $2,000 per month because it was basically a reimbursement, and she couldn't understand that. And so I'll give you all an example. If I give you $20 to go have lunch. No, if you spend $20 to go have lunch and you come back to me and I give you back your $20, you don't have $40, you still have $20. And so that is the way and the lens that we look at it, because again, where there are spaces and gaps in those guidelines, we are generally going to be the most conservative leaning as possible, so it doesn't trip us up later on down the line if they start to experience a shift in employment and they're not able to make that mortgage payment one time. The next question is, do they take frequent breaks? Do they have a next assignment lined up? I've talked to people over and over again, they're like, oh, no, I'm chilling. Oh, no, I work. Oh, I have a lot of money. I'm okay. That is not an acceptable response, regardless of how it's framed on paper, regardless of what it looks like when the money is in the bank. That creates an opportunity for that person not to go back into that job to continue that same level of income that they may have been approved for with, say, a $600,000 house. We understand that income is based upon if that is a 4-week, 8-week, 13-week assignment. Every single contract assignment is going to have a different rate attached to it. Now that travel nursing is a lot more popular, they are a lot more savvy about their negotiating. However, if you are encountering someone that has made a lot of money, but they'll work a lot the first half of the year and kind of relax to take back some of their time, which is completely fine, but doesn't work for housing. So if you find yourself in a scenario where somebody, oh, I already made, $100,000 this year, I'm gonna take a few months off, that is not acceptable. They need to find a job quickly if they're going to start the process of home ownership, and they need to be at that assignment throughout the entire duration of going through the underwriting process and pre-approval process. And lastly, do they have multiple jobs? With nursing income, I have found with almost everybody, they had some sort of side nursing income, whether, since we're here in North Carolina, let's say they had a permanent job with Atrium, but they'll leave Atrium because it's sort of part-time, and they might go to California for 13 weeks or Massachusetts for 4 weeks or Hawaii even. I mean, the sky is limitless when they are traveling. And so if they are in a scenario where they started out at Atrium and they were working at Atrium full-time for a year, year and a half, 2 years, and then they eased out of that, made that part-time income, and now they are full on travel nursing, great. That is a much better scenario in the event that we can't use that travel nursing income as aggressively as we would like. We can always fall back on that. So the more opportunities there are to calculate income, like I said, if I'm not able to count those stipends that they're receiving, that's better off for that particular client. So be mindful, again, we're looking for stability, predictability, and the likelihood of continuance. The one exception, so that what I was saying was about you needing 2 years of travel nursing experience. If you have maintained a full-time position with a employer as a nurse for 2 years, and then you decide to reduce your income, we only need 1 year of travel nursing experience, because it's effectively the same and we can show that continuance of employment. Two major hurdles, as I was stating, is calculating and determining income stability and assessing occupancy, especially in the case where the assignments require the frequent travel and they're intermittent. I know of someone that, it wasn't my loan, but it was a realtor friend of mine. The young lady makes a ton of money, bought a home near the airport, and uses it like a crash pad. So she rents out all of the rooms, and the travel nurses, they come and they stay, and she's not there. That gets really, really gray area-ish for us. And so you want to also make sure that in those cases, while there's nothing really wrong with that, you don't want to put the client in a scenario where it could appear that they're committing occupancy fraud. And to be totally clear with you about what it looks like when it's occupancy fraud, in a scenario like this, if they've not established themselves in a particular community, because they might be in California for 3 months, they might be in New York for 3 months, you know, they need to have established themselves somewhere. And as long as they're established in an area, they shouldn't have a problem. But if it looks like they're transient and they just buying a house just because it's a great way to, you know, spend some money and to make some money in investment income, we're going to have a problem with that. So please make sure that when you're talking to them, you are absolutely confident that where they're looking to purchase is actually their actual home space. Any questions about that? Okay, and so per diem income is effectively to be paid as a contractor to cover an expense while you're traveling. I touched upon this a little bit earlier. All it is, it's not stable. It's just me giving you back money that I already gave the first time. And it could potentially be used with some loan products. USDA has a line item for it. Fannie Mae has a line item for it. But if your borrower, your client does not fall under those categories, they are going to find themselves in a pretty sticky situation. And when it's a sticky situation, as I said earlier, they're always going to look for a way out and a way to not use that income. I promise you. So we do written verifications of employment. And that's something that is completely out of our hands. This is 2 different written verification of employments that I received from borrowers earlier this year. One of my borrowers closed in May, and the other one closed last month. And the one problem that we came against, these people are almost identical, 1 year and 4 months with the employer, 1 year and 7 months with the employer. The same travel nurse company, Aya, for both of them, same staffing agency. Everything is pretty much the same. Their incomes were relatively similar. Background was similar. Loan amount was similar. And they declined her loan at another company because of this word right here. The exact same person filled out this form. In May, she just simply said, hey, this person is the contract employee, at will employee. In a couple months ago, the same lady said, oh, no, we have to add in that they're a temporary contract assignment. That is a red flag. An underwriter is going to be very nervous because it implies that there is an end date and you don't know where you're going to go next. So you're going to have some answers for that. I was able to overcome this challenge simply because I pointed out we already gave a loan to somebody in the same situation. So what is the problem? So being able to reference past situations is always going to be helpful because you want to have consistency in the underwriting because nobody wants to be sued for potential discrimination. So where are y'all gonna find these nurses? These are some great staffing companies that you'll find if, I don't know how active you might be on LinkedIn, But these are potential avenues to follow some people, create some relationships with potential borrowers, because these travel nurses are out here looking for homes to buy. So I know Instagram is super popular as well, but these are some companies that I can tell you I have been able to have positive experiences with the way that they set up their contracts for their travel nurses, and I've been able to get them closed. So does anyone have any questions?
When you reach out to the agencies that you just showed, how do you like prospect them?
I would say not. You could call HR. You could try to get in and find some relationships with the people that are actually making these contracts. Because I mean, these HR departments, I have a friend, she's moving to North Carolina from Fifth Third to get a job with Fifth Third. A lot of times they have these relationships and things set up. I'm a preferred person with CMS, and all I did was reach out to CMS and say, hey, what do I have to do to get on the list?
Yeah.
People don't tend to do that. So try to insert yourself into those spaces where they might not have relationships already set up.
Good answer. Okay, thank you.
Your stipend topic. Basically, they can't get a reimbursement. It has to be a true stipend for, like, food, what have you. Additional money, not money coming out of their current pay, and then it just because it's going to be the same amount. That was the main takeaway, correct?
Yes, absolutely. And you can see that on the pay stub. When you go through the top part of the pay stub and it starts doing all of the deductions and say, okay, here's your net take home. And then there's another number below that adds some more money back in. If you don't understand, and to most people, they're like, oh, I got this extra money. It isn't taxable income. An income that is not taxable is going to be extremely difficult to make an argument to an underwriter to count. It's gonna be too hard. They're not comfortable with that idea. Is it possible? Maybe you might find somebody that'll be willing to do it, but more often than not, it's a hard no. Coming from the banking world, and I'll tell you, I worked for Ally Bank and I worked for SunTrust Bank, well, now Truist. They're not playing it. They have no interest in anything that sounds like you don't know. And you can take these very same principles and apply it to some other types of incomes or some other types of employees as well that get paid similarly. They are not interested if you say that you work as a temp through a temp service. I have been able to get those people closed as well. I had 2 of those earlier this year. And I was a little surprised because all of my experience had been with the bank with that scenario. And I was like, oh, no, we can't do that. I was like, let me try. Let's see what happens. And we closed the loan with no problem. So I can say with my chest that we are pretty aggressive in making sure that we're able to get borrowers into homes. We're not going to do anything that's unscrupulous. It's going to put them at any danger, but we'll be as aggressive as we can be, for sure, to try to squeeze out every dime that we can. We'll escalate if necessary. But again, for me, I try to be as conservative as possible. How much money do you make up front? Even if they're in a situation where they're approaching there and they're like, oh, I want to buy a house in June. Go ahead and ask those questions and make sure that when they go into that next contract, they're negotiating appropriately so they don't run into those issues with stipends and they're able to get that income up front versus being reimbursed. Any other questions, comments?
And did you say they were 1099 versus W-2? I remember you went over that, but I missed it. Say that again.
1099 is the self-employed borrower. And so we typically are going to require them to have 2 years of experience in being self-employed. So what that looks like is I was like, okay, let's say somebody's a travel nurse in 2022. I'm a travel nurse. I started being a travel nurse in 2021, and somewhere 9-10 months later, I'm now 1099. It's inconsistent. Generally, when we are talking about employment, and this is universal, this is not talking just about travel nurses, we don't care if somebody changes jobs. We could care less. What we care about is the manner in which they get paid. And sometimes when you switch industries, the pay is a little bit different. So you can very well be an attorney, and now you make partner. Well, guess what? You self-employed. You gotta get to the back of the line. Should have bought the house 30 days ago. That is the type of shift that we're talking about when we're talking about the difference between going from W-2 to 1099. Now, if they're going from 1099 to W-2, we'll take that all day. We're like, oh, great. Perfect. Let's move forward. It's significantly easier to go from 1099 to W-2 versus trying to do it the other way around. They're going to be looking at averages. They're averaging, did your income go down? So we're looking at 2 years plus year to date to see what is the trend. And again, going back, it's the holidays. These nurses, they've taken off work. They've taken off the whole month of December. December might bleed into January. And they're going to come to you, want to buy a house in February. It's like, oh, what you been doing? What happened? What happened to your money? So just be mindful of that. We want everything to be as consistent and tight as possible. I'm not saying that if it's sloppy, that it can't close, but I'm saying if it's sloppy, it's going to be a disaster. It's going to be they're going to be kicking and screaming all the way to the closing table. And it doesn't make for a good experience for the borrower. I'm sure y'all have had experiences where you felt like you put on your cape and you were the hero. They don't remember none of that. They only remember it was a miserable experience. And so we want to try to give them the best service, the best experience possible, and get them into the home. And like I said, that written VOE, depending upon the verbiage that's on there, we could have been as aggressive as possible, calculated everything, their debt ratio, all types of things. But if the person filling out that written verification of employment slips up and says anything that sounds like this person is going to lose their job, you're gonna hit a wall. It's gonna be a challenge. Like I said, fortunately, in that scenario, I was able to create the argument. I'm like, hey, hold on. These people are practically the same. Wait a minute, what's going on here? And we were able to move forward. So it's always going to be good to work with someone that has had experiences with those scenarios to try to get your loans closed. So I'm happy to help if you all come across any travel nurses or any scenarios. I'm happy to look at them. All of our platforms, everything is online. Our loan application is online. Most of you have the app already that you can provide to your borrower so they can fill out everything and upload all of their documentation so that when I do look at it, I'm able to know what I'm actually talking about and I'm seeing without taking guesses. Earlier, I mentioned that lady with the stipend, and she was talking and dancing around everything. And I'm like, I need to see it, girl. And eventually she sent it to me, and unfortunately it was not going to work in her favor, partially because her employment had been relatively short. So all of those things work in tandem with one another. If someone is lacking, even let's say it's a scenario where they do have a stipend and I'm like pushing, like, well, what can we do? What can we do? If they have a low debt ratio, if they have a lot of money in the bank, the underwriter is going to underwrite the risk in that case and be maybe a little bit more flexible. So the entire package of the borrower that's coming to us, it all matters. Like, unfortunately, we like to isolate things. We can't isolate things. Like, it's a little challenging to just isolate it to that one thing, unless, like I said, a written BOE just says, hey, yeah, this person not gonna have a job in 2 weeks. We'll have a problem with that. And if that's the case, see if they can find, you have a contract that you can supply to us, so we'll see what you're gonna be doing next. We wanna find the continuance where it's possible. All right, so it is 12:08. You guys, I appreciate you all joining me. I am recording this, so I'll send this out to you as well as some bullet points. So I appreciate you all joining me. I know it's Christmas and everybody's out shopping. If you all have questions, here's all my contact information, so feel free to reach out to me. Thank y'all. Y'all have a good day.
Thank you. Bye.
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 Thank you.
Thank you, Joy.
Thank you.